Good morning. It's Tuesday, the 9th of April, and this is Govindraj Ethiraj broadcasting from Mumbai, India's financial capital. Our top stories and themes for the day that we've got for you: markets hit new highs and break records, this time on global cues. How Wall Street is bracing for no interest rate cuts at all. Gold prices hit fresh records as central banks step up buying, and now silver follows. In India, low cooking oil and sugar prices are keeping inflation down, understanding the mechanics and why it's happening. Should CEOs, particularly of IT services companies, be closer to the troops? And Wipro sees yet another departure.
This is a core report with Govindraj Ethiraj.
The markets hit new highs and new records. It was a general record-breaking day for the stock markets, with benchmark indices, the BSE Sensex and NSE Nifty, hitting new lifetime highs. The trigger appears to have come once again, though after a while, from Wall Street. Nasdaq and S&P 500 ended over 1% higher on Friday after a positive job creation report for the month of March. A strong economy also means that interest rate cuts in the United States may take longer, and there are some interesting theories on that which I will come to in a moment. Back home, auto, energy, and metal stocks were the big drivers of prices. The Sensex hit a fresh lifetime high of 74,869 before ending the session at 74,742, up 494 points, while the Nifty hit 22,697 before closing at 22,661. That's up 152 points. The 10-year Indian government bond yield rose to 7.14%, similar to the United States Treasury yields, which went up after that strong economic data that we referred to, and therefore pushing back expectations of the timing of the first rate cut by the Federal Reserve, which in general consensus was supposed to happen in June. Foreign investors have stepped up again in Indian markets, buying stocks worth about 1,700 crores rupees on Friday, according to Money Control. Early signs of Q4 results are in, and companies like Voltas have reported a strong performance on their product sales, among other companies who also reported some numbers. We'll have to generally wait to see the financials, which will soon start arriving. TCS will declare results on March 12th, or Friday. Brokerages like Motilal Oswal are expecting Nifty earnings to grow 6% year on year, while Kotak is expecting a 4% year on year growth, according to Money Control, which has compiled this. Now, if you've been following growth and sales numbers in general, including on the core report, you would have obviously noted that sectors like auto are seeing record sales, like, for example, in passenger vehicles, and will obviously post results that will be strong and higher than perhaps other industries. Will the United States cut rates or not? After a new jobs report in the US on Friday showed that the economy was still running strong, more traders are betting that the Federal Reserve may cut the benchmark federal funds rate just once or twice this year, fewer than the earlier forecasts of 3 quarter-point cuts. Some are even saying that the central bank will leave rates where they are, according to the Wall Street Journal. So as likely developments go in this world, this is dramatic. The stock market rally is built on the fact that the economy would slow enough for the Federal Reserve to lower borrowing costs from multi-decadal highs above 5%. Instead, the market is now faced with the prospect of growth and inflation keeping rates much higher or far higher than anticipated. So while stocks recovered ground after Friday's jobs data, triggering, of course, market rises across the region, the Dow Jones was down 2.3% for last week. Now, investors are looking out for Wednesday's consumer price index. Inflation has cooled significantly from 40-year highs in the United States, but 2 months of stronger than expected readings have reinforced the Fed's wait-and-see approach to cuts, says the Wall Street Journal. Now, back home, while the Reserve Bank of India does not necessarily get influenced by the Federal Reserve and is largely driven domestically, the world is obviously watching to see how the Fed moves or does not. Moreover, in India, there is not so much correlation between lower interest rates and flows into money markets or financial markets, as investors are looking to beat inflation by investing in equities, at least off late, versus other financial instruments. Gold prices spike again and silver follows. Gold prices are rising once again, hitting fresh records. Central banks like China and India are also powering much of these purchases. According to Bloomberg, China's central bank has purchased gold for its reserves for the 17th straight month in March, extending a buying spree that has helped, obviously, the precious metal hit new records. Apart from China's central bank, Bloomberg says Chinese consumers who are worried about falling returns in other assets and a depreciating currency are buying gold. On Reddit's platform, self proclaimed stackers are boasting of hoarding bars and coins of gold, that is. Now, that was gold. Silver prices were at a 3 year high globally, and silver prices in India are at an all time high at around 82,000 rupees per kilogram. Silver prices were up 11% week on week and 14% month on month. We had earlier on the core report spoken of the demand spikes projected for silver, both from consumer and industrial sectors. The industrial sectors include areas like renewables and electronics. So, if you've been following the core report, perhaps you may have bought some silver. Oil consumption is down a little for India, and prices of oil have edged down in the last day. India's fuel consumption has fallen about 0.6% year on year in March, but demand for the 2024 financial year was up about 5% thanks to higher automotive, fuel, and naphtha sales, according to Reuters. Total consumption, a proxy for oil demand, was about 21 million tons in March, down from 21 million tons also last year. But the difference was only in decimal points. This preliminary data came from the Petroleum Planning and Analysis Cell of the Oil Ministry and reported by Reuters. Fuel demand for the 2024 financial year ending in March, however, was at a record high of 233 million tons compared to 223 million tons a year earlier. Sales of diesel and gasoline rose between 3 and 7%. Meanwhile, Brent crude prices have now slipped below $90 a barrel. So many governments, for sure, at least those buying oil like India does, must be breathing a sigh of relief, at least for now. How edible oil prices are keeping inflation down. We've been talking about food inflation frequently. One big reason it is staying up right now is vegetable prices, where inflation is at a staggering 30%. The high inflation rate is also compounded by the fact that prices swing so suddenly that there is no real way to manage them for reasons we discussed in yesterday's conversation with CRISIL chief economist DK Joshi, who also defined it as the cobweb effect, where farmers take up a crop when prices are high and do not when prices are low, which of course causes supply problems. After vegetables, even pulses or dals are at about 19%, which is also a very high rate of inflation, and this has been steadily high and not fluctuating like vegetables. Only cereals, which include rice and wheat, are at a lower rate, which is around 7.6%. All these figures are for February 2024, released in the second week of March or last month. Now, the only area where prices are low and have stayed low is oils and fats, which are at a negative 14%. So, how and why is this happening with cooking oil? That's an important part of our food consumption. India imports almost two-thirds of its edible oil requirements, almost like crude oil, though crude oil is higher, close to 80%. We have dwelt on this theme before, but it is interesting and worth revisiting, particularly in the current context. I reached out to Atul Chaturvedi, president of the Solvent Extractors Association and also chairman of the Asian Palm Oil Alliance, as well as chairman of sugar company Sri Renuka Sugars. And I began by asking him to describe what was happening in the edible oil market right now, both in India and overseas.
Now, there's another commodity in the total basket, and that is sugar. Sugar also is inflation proof. Now, edible oil is suffering from negative inflation, that's for sure. And that's largely due to the fact that government of India has kept the duty, import duty, practically zero, which means we are only paying about roughly 5% import duty. And that has ensured that the edible oil prices have remained largely in check. The other thing is that we've had a reasonably good soya crop. In fact, this year we probably have harvested something close to about 12 million ton plus of soya. Our mustard crop is also an all-time high in excess of about 12 million tons. Plus, we also had a carryover of about 1.5 million tons of mustard. Edible oil imports, as you rightly pointed out, is almost something like 60-65% of our consumption. So all these factors put together have kept a lid on the prices. And the other thing which has also kept the edible oil prices in check is that towards the last quarter of last year, Indian importers thought that El Nino is going to create massive supply chain disturbances. And they imported edible oil like as if there's no tomorrow. So the overhang of that is also affecting the markets. Now the imports have come back to much more reasonable level. That has ensured that the edible oil prices in the country have remained largely in check. Whether it's good for the Indian oilseed sector or not, that's another question. Because we find that the mustard farmer would be feeling a bit cheated in the sense that the mustard prices are still ruling below minimum support price, and the same applies to soybeans as well. Something is good for the consumer, but may not be good for the producer.
Right. And when you say mustard and soya in India, that which you're saying is below minimum support price, so that would constitute the balance 1/3 of total consumption.
I would say a major edible oil, if you look at the Indian edible oil matrix, our consumption is close to about 25 million tons. Out of this 25 million tons, we import about 15 million tons, give or take 500,000 tons here or there. And the domestic production is about 10 million tons. And this 10 million ton is inclusive of mustard, soybeans, groundnut, and all the other minor oils like rice bran, cottonseed, and so on and so forth. Yeah.
And I'll come to sugar since you also have a very substantial sugar portfolio. But how is the outlook looking for edible oils? I mean, and let me define that very specifically. So, for example, in vegetables in India, and I'm sure this applies to other parts of some parts of the world as well, there is a clear fear now that heat waves could cause prices to rise or could have other impact on prices. And it may not be just vegetables; it may be other food grain as well. What is the outlook, or are there any concerns about edible oil wherever it is made, whether it's in India or Far East or so on?
No, we don't expect edible oil prices to go through the roof for the simple reason that palm oil had actually become pretty costly, and that was largely on the strength of diversion towards biodiesel. But now palm has lost its demand big time in India. And in fact, in the month of March, the import of palm actually plummeted down to 4 lakh tons, which is probably one of the lowest level of imports of palm. And that's largely because the delta or the difference between, or we call it in our language, that the spread between palm oil and other soft oils like soya and sun had actually narrowed. And palm has to sell in India or in the world at a certain discount to these oils. So, which was not there. So, with the result that its import has come down. And the biggest gainer in all this is sunflower oil in the country. Sunflower oil is considered as one of the best or one of the premium oils. And surprisingly, currently sunflower oil is actually selling lower than palm oil. And that's because Ukraine and Russia have harvested a pretty good crop, and the supply chain is reasonably well maintained. As far as soybeans is concerned, Latin America has had a very good crop. Argentinian crop is also likely to be very good compared to what it was last year. Brazilian crop is again very good. So all that, and plus palm oil will now have the higher production months coming in. So all that should ensure that the edible oil prices remain in check. Further, the mustard crop marketing would be in full flow, and that would also ensure that the prices are kept in check. The only caveat in all this is, in case of mustard, NAFED has become pretty active. And if NAFED is able to suck in about 2.5 million tons or thereabouts, so that would ensure that the mustard prices do not fall too much. And the crushing operations also, on a relative basis, muted. So all that will ensure that the prices don't go anywhere in India. They are bound to be now, at least for the next couple of months, we feel that the prices could be softer than what they are as of today.
Right. And NAFED, of course, is the National Agriculture Cooperative Marketing. So that's the agency which would buy these crops. So can you tell me, is this the first time that sunflower oil, because palm oil is generally the more cheaper and I guess consumed more widely. Is this the first time that sunflower oil prices are below?
Absolutely. I've been tracking sunflower for almost now 3 decades. And this is the first time in my life I'm seeing that sunflower oil is selling lower than soya and lower than palm as well. And palm currently, in fact, if you look at the values today, palm is selling in the local market at around, palm oil is selling at around 96 rupees, whereas sunflower is available, I'm talking about the wholesale market, sunflower is available at 94. And even in terms of imports into India, CPO is at around 1,040, olein at around 1,020, but sunflower is available at about 960 odd CNF India. So the prices are in check, and sunflower consumption in the country is actually growing big time.
Right. So, and many of the branded sunflower products, therefore, should be passing on some of these benefits.
I'm sure they would be, because edible oil markets are very, very competitive. You cannot charge any premiums.
Right. So let's come to sugar, and in that sense, perhaps complete the plate of consumption. What's the outlook for sugar at this point of time?
Sugar has had a very interesting period in the last few months. In the month of August, we were all very disappointed because there were practically no rains. And the industry went ahead and said that the crop is going to be suffering big time. And we had all kinds of stories. But then come October and November of last year, we had very good rains. And there's a crop which is known as Adsali. Adsali means about 18 months crop. And that is almost 50% of India's cane got the advantage big time. With the result that the crop which had actually got discounted to the extent of about 30 million tons is now likely to be above 32 million tons. And another 2 million tons as diversion towards ethanol, which means in sucrose terms, the crop is in excess of about 34 million tons. So that's a big game changer. And now in retrospect, we feel that the government action of banning exports or cutting down on ethanol diversion of cane juice was a little maybe uncalled for at that point of time, but you'll have to probably give them the advantage. I won't say the advantage, but with the elections looming and inflation being a bad word, probably they've erred on the side of extreme caution. World sugar values have been very high, and it would have been a fantastic and a golden opportunity for Indian sugar to find a home in the world market.
And you're saying that obviously we're producing enough to have potentially met domestic demand at a good price and export, and therefore earn better realizations.
If you really look at our consumption pattern, we are consuming roughly about 28 or 28.5 million tons of sugar. And this year, if you see, we started the year with a carry in of about 5.6 million tons. Add to that 32 million tons. So 32 and 6 is about 38 to slightly less than 38. And diversion and this consumption at around 28 or 28.5, which simply means that the carry out could be closer to about 9 million tons. And India can well afford not to carry that much of sugar, because we feel that 6 million tons of sugar is good enough, because it takes care of about roughly 2.5 to 3 months of consumption.
It was a pleasure talking to you.
Thank you very much.
Wipro's revolving door. Before I come to the latest CEO exit for Wipro and what it means potentially, IT services companies like Wipro, TCS, and Infosys have run interesting experiments, for lack of any other term, with their CEOs. Before I come to some examples, here is the poser. Where should the CEO of a company sit? Where all the clients sit, or where the employees sit? Now, for a smallish company, whichever way you define it, the answer may be somewhat simple. But for a largish company, and I'll come to numbers shortly, the equation shifts a little bit. Or you could also, of course, argue the converse, but let's go through the numbers. So Wipro has about 240,000 employees, TCS about 614,000, and Infosys about 335,000. Now, these are very large numbers. And I'm reckoning roughly 80% of these employees, so let's say 200,000 in the case of Wipro, sit in India. So the 20% for Wipro, if it is sitting closer to customers or around them in North America or Europe, is also a large number, but proportionately small compared to overall size. So as we know, some 60% of revenue, let's say for a company like Infosys, comes from North America alone. It's safe to say that 80% of revenue for most IT companies, if not much more, comes from these markets. So the CEO, therefore, should be sitting next to them. Now, that was the argument most likely in the case of Thierry Delaporte, who stepped on as CEO of Wipro last week, a year ahead of his term ending in July next year or 2025. But Thierry was mostly working out of Paris and thus mostly away from the company's HQ in Bangalore. Now, I don't know the details, but the fact that he was not here and potentially his disinclination to move to India full-time, as I understand at least, may have played some role in his departure. Now, his successor, on the other hand, Srini Pallia, is a Wipro veteran who started in Wipro and has been there for over 30 years. But then he sits in New Jersey and will work from there. So he is an old hand but does not sit in the HQ. So to that extent, his presence in Bangalore is not as critical as his proximity to clients. Thierry, of course, was an expatriate, and unusually an European one at that, and not a Wipro lifer or an Indian extract person as Srini is. Both Infosys CEO Salil Parekh and TCS CEO K. Krithivasan are based in India from what I can see, though Krithivasan likely has moved from Chennai to Mumbai when he took over as CEO of TCS, which is headquartered here in Mumbai. Salil Parekh worked with Capgemini earlier in Mumbai, and incidentally, Delaporte was CEO of Capgemini Global earlier. Vishal Sikka, earlier CEO of Infosys, used to sit in the United States and did not spend much time in Bangalore, and that may have caused some problems as well, at least going by some reports. He left and made way for Salil Parekh. So, apart from Bangalore traffic, which could surely and quite seriously put off several potential executives, I do not quite see a trend. But Wipro itself has had more exits and faster ones than most before. I have interviewed at least three of them in recent times, including TK Kurian and Abid Ali Nimachwala, who preceded Delaporte. Kurian, of course, has stayed back to run Premji Invest, the investment arm of the Premji family. So is it possible then that CEOs leave too fast or don't get enough time to execute on their vision? So the tenure of CEOs itself is shortening everywhere, which is world over. But maybe Wipro's revolving door is just spinning too fast wherever the CEO sits. So what ails Wipro itself and what is working for it or not in the context of the industry, which itself is facing pressures? I reached out to Rahul Jain, Vice President at Dolat Capital and also IT industry analyst who tracks the industry very closely, including its history. And I began by asking him how he was seeing Wipro presently.
If we go to the history all the way when it all started, when all of these companies were kind of a startup back in early 2000 kind of a thing, Wipro used to be a top performing company with Vivek Paul at his helm. And it was rumored that he was one of the highest paid executive in the world, although he was based out of, he was CEO of a company in India. So that's very difficult to imagine in those days. But that used to be the history. And then we saw he scaled the business multifold in next 5 years. And then he suddenly left the organization to be part of a private equity setup. It was always very difficult to digest kind of an exit. And ever since we have seen there is at least 4 or 5 different experiments which company have run in terms of getting the CEO internally, externally. Even they tried 2 CEOs kind of a structure, but nothing worked for them. Now coming to your more on the history background kind of a thing, but more specific to your question, I think you have to see what is the competitive landscape, how various players are based in the industry. So you have industry expert in form of company like Accenture, where people see them as a consulting plus services kind of a model, which is at the top of the pedigree. And then you see, India heritage companies, which are large, have proved their capability for the last 20 years, but are also seen as a relatively economical option to Accenture. And you have 3, 4 large name out there, right? From TCS, Infy, HCL Tech, Cognizant, and Wipro in the same bucket, right? All of them are either bigger or similar to Wipro. So, it's very difficult to have a positioning if you are a fourth, fifth guy in the same cost bucket. So you end up getting the customer, which is kind of a secondary or tertiary in nature in their own industry. So what I mean to say, if you are serving an airline, you will get the fifth airline as your customer because first, second, third, fourth airline will choose Accenture, Infy, TCS kind of appear, and then the fifth, sixth guy would come to you. And obviously, when the macros are bad, those clients face even more stiffer challenges because they are me too player in their own respective categories. So that is how you get a relatively weaker portfolio over a period of time. Wipro never invested in significant niches, and that's why, unlike HCL Tech, which covered up that gap by expediting on the IMS league earlier, then in ER&D, and now product and platform, it win back its ranking by differentiating in that manner. So Wipro, you can say, is a me too player in that balance, in that size, with no specific niche of its own, makes it difficult to grow on that base. So those are the reason I would identify, but happy to double down on that if you have anything more to ask.
It's not that Wipro is not a success in I mean, it's only in a relative way that perhaps it's not done as well, at least in the current scheme of things. So I have two questions, Rahul. So one is, what are the areas that it is strong and which is, I mean, keeping it and it's, let's say, 240,000 employees going? And the second is, does it matter where the CEO sits? I mean, that's another theory I'm trying to explore. I mean, for example, the current CEO or the outgoing CEO, Thierry Delaporte, was based in France, and he obviously wanted to work out of there.
There was a period when people were targeting or wanting their CEOs to be based closer to their clients, and we saw plenty of them even today based out of United States for those reasons. So that's always an advantage. CEOs are required at times for closures, if not for pre-sales or any other factor, but definitely for closure in tight contested deal, especially in this kind of a market. So those are generally the advantage. But can that be alone a decision-making point or understanding a change of fortune for a company? Of course, it's one of the 100 factors which would be relevant.
To come back to the earlier one, where do you think Wipro does have a strength then? I mean, we've talked about the weaknesses, but where would they have a strength in your understanding?
No, I think I would rather say that, referring to your own point, which is like they have done decent. What we need to also understand, what is the benchmark, right? It's a global business. These companies are respectfully sized in this industry. The global market grows at 3.5% on a long chart, 10-year, 20-year basis. So that is the right benchmark to see whether the company is growing faster, slower, weaker, whatever. Generally, we tend to do a relative performance. Just because Infy and TCS are clocking 7% does not mean 7% is the benchmark. So yeah, to that extent, that possibly justifies why even a slower growth is not as bad, because the industry itself is not growing so much. It's more like they're not winning market share while some of the peers are winning market share from global peers. To your point on what they specialize on, at different point of time, they try to anchor something as their differentiating point. For example, they acquired a company called Capco, which was more into consulting in the BFSI space. It was a good strategy to try out because nobody has done in India in that manner. It is still working on that lot. It may finally click for them. We don't know. We are into early days into that. And similarly, in the past, they were largest in the oil and gas space because they acquired a business of SAIC. So they have done through inorganic, they have tried to be differentiated. So far, has not played meaningfully for them, but you never know.
Thank you so much for joining me.
Thanks for having me.
That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.